Well, well, well. Not bad, eh? War overseas has really got the markets kind of messed up today. Now, we're still hearing that there is a lot of activity happening over there. Missiles are still flying and what have you. The problem is the markets are all going up. But wait, today I'm going to be breaking down the logic of what appears to be the commodity run. We're starting to head into that. And if we go and look at all the previous crises that have happened in the world, whether it was financial, anything related to war, the commodities always start to make their move. Now, with that being said, I'm going to be diving into a couple of concepts here, showing you a few charts just to help you understand where we are, what could unfold, and what we can expect from several assets like Bitcoin, Euro, NASDAQ. I mean, Bank of Japan have popped up again, but we'll talk about that very, very shortly. But other than that, firstly, I want to say happy Father's Day to all the guys out there. You're doing a good job, man. It's tough being a dad, you know? It is. But it's the best. It's the best, man. It really is. So happy Father's Day to you. I know it was yesterday. Happy belated Father's Day. But anyways, let's get with the program, guys. Let's break it all down. Let's help you make sense of this madness and try and keep this live short and sweet. I'm not going to keep it short and sweet. I'm going to keep it until the open, and then whatever happens at the open, happy days. Yeah? So you got what? 20 minutes? I think that should work nicely. So let's get with the program, gang. Here we go. So news. Futures do rise. Oil is easing off its gains. If we just quickly go over and have a look at oil. Don't worry, Bitcoin. We'll get to you very, very shortly. So look, oil, it's making some significant movements to the upside, and it's come towards that 78 point. Now, remember Trump said that his goal is to get oil down to around $50 a barrel. Come on, man. You got the Saudis like pretty much owning 4% of the oil supply. Well, they bought a stake in oil supply through Barclays or what have you. But anyways, that was in 2007, 2008, before the subprime mortgage crisis, when they had previously made a purchase or a stake in oil. And yeah, that led to a $150 run in oil, not because they made the purchase, because we were going through a financial crisis that oil's price started to move up. That would then make sense as to why oil's price right now is moving up. The common thing that we're seeing right now, guys, is investors. Yes, they're looking for safe havens, but we're starting to go into commodities right now. Oil, gold, silver, bonds, maybe not so. What you've got to understand right now is investors are now seeking commodities as the true aspect of inflation hedging. Why? Because they think that inflation is going to go up, but more importantly, this story with the war is going to have a ripple effect. No doubt, Jerome Powell's going to come out and say, yeah, we're going to have a problem with the impact of oil's price going up. And of course, we've got the idea of the tariffs. So that's going to be putting investors in a position where they need to protect themselves. So let me explain to you exactly what the story is. So it says that everything is starting to calm down, but we've, of course, had some news of that there's still Iranian missiles hitting Tel Aviv and Haifa. Sorry if I can't say it. And Israel warns of a tough response. So it's back and forth. That's what we're getting. Okay. And this is all in favor of nuclear warhead development. They don't want to have that risk over their head. So until that is done and dusted, they're not going to stop. Now, the US is starting to intervene, and then you've had Finland as the only one that's come up and said that they are condemning these behaviors. Finland. No one talks about Finland. Why would they even be talking? Like, we should be hearing the UK, the US, Russia. I mean, everyone is also having a conversation. Putin and Erdogan have actually decided they're going to be having a conversation. They're not happy with what's going on. Who is happy with what's going on? Now, what I think is going to be happening, guys, we're starting to not focus too much on tariffs right now. Now we've got this war. A lot of people have been saying it's a fake war. There, whatever you want it to be, or the reason of it, there's still bombs being hit. Okay, that means people will still be reacting to this information. People are getting hurt, and all of that madness that is unfolding. It's not a good place to be. But the unfortunate story is the game we are in is profitable when it comes to these certain events. At the same time, when I say it's profitable, you can also protect yourself and not be worried about any existing profits taking a hit because of these events. Let me explain. As it stands right now, JP Morgan thinks that there is a problem with the markets going through to 2025, okay? That's where it's standing. It's blaming the idea of tensions overseas. It's blaming the idea of the tariffs. We don't know where we are with the interest rates. We don't know how long inflation is going to stay low for. So JP Morgan has given a prospectus to its shareholders as such, saying that, yep, we think there's a bit of a mist going off here. We don't know exactly what's going to happen, okay? Let me draw your attention to this chart right here. This is the copper-gold ratio. Anyone know what this is? To simplify it, copper price reflects the global demand in the manufacturing industry. Copper prices rises when Chinese economy or the US manufacture expands. Well, we know there's going to be a problem with that because you've got a Chinese economy that's slowing down massively. You've got the US coming into play, putting tariffs on China. The US manufacturing index has been showing expansion and contraction, so it's not really here nor there. Now, what you've got to understand is when it says here, the ratio of copper gold rises as the global economy expands and stocks rise too, okay? When economic uncertainties increase, demand for gold for hedging rises and copper to gold declines. So what are we witnessing? The ratio is going down. So by that principle, it means gold is starting to get picked up, okay? Now, if investors' expectations of the future ain't looking good, what's going on with the stock market up here? This right here is the stock market. So some of you might be thinking, hold on a second. Is the chart broken? Are investors going into it all? Are they actually going into it? Well, let's just look at gold for a second, right? Gold hedgers position index. So what we've got to look for is if commercial hedgers are long, okay, and their exposure is massive long in gold, at the green bar right here, it would tell us that they have a commitment that they believe gold's price is going to go higher. So they're hedging themselves. When the blue line is at the green line, there is a long exposure in gold. We have just come down to these lows right here, which means that if they're not long on gold at the green, they're net short. But now we're starting to see the line going up. And it looks like we could be getting close towards that hedging position of gold's price, or this chart showing an extreme of green, which could suggest gold's price is going to continue up in the future. Have we got a justification for gold's price to go up? Yep, inflation. Secondly, interest rate cuts in the US, because when they cut the rates, naturally gold's price goes up. You've got a war. Of course you have. You've got a horrible dollar. And more importantly, we go over to it right now. Check this out. Where is it? I saw it this morning. Gold passes euro as the second largest global reserve asset. That is nuts. So if you look at the rate that banks are picking up, so the bullion held by world central banks reaches levels last seen in the 1970s. Okay? So there is a massive accumulation for gold. That means there is uncertainty. And if we go over and have a look at the dollar dominance itself, that is evident. There is no point in holding any gold whatsoever, any dollars whatsoever by the logic of this. Your dollar appreciation, zilch, it's going down. Bring that over to the bonds market for a split second. No interest in the bonds. But wait a second, why is the stock market going up, Tino? Why is it going up, sir? Like, why? I'm not calling myself sir, but I'm saying, why is the stock market going up if it's all doom and gloom? I mean, look, just before we put it into perspective, we could have even more bad news. Listen to this. Surging bond yields adds pressure to the Bank of Japan. What do we know about the Bank of Japan? They've been doing this wild bond buying spree, which has got investors concerned because they're not really managing the money correctly in the government, and they just keep on buying bonds and what have you. And investors are like, okay, if you keep buying bonds, trying to force the yields lower, we're going to be demanding more of a yield from you because why are you buying up so much? Stop it. Stop. And that's got investors quite concerned about things. Now the Bank of Japan is in a situation where it does need to stop buying the bonds to gauge the investment sentiment behind purchasing Japanese bonds. In other words, they're losing faith in the Japanese bond debt, okay, which is forcing the Japanese yields to keep on going higher. Now, how do you get people to buy your debt? What do? When you want to encourage someone to come and pick up your debt, you've got to say to them, hey, man, I've got some debt here. And they're like, okay, cool. What you offering? Well, I've got a yield of 0.25% on that. Yes, I know, but behind the scenes, you've been buying this debt like mad, and even your domestic and commercial companies ain't picking it up. Why on earth are you buying your own stuff? Like, what's going on? What are you trying to do here? Why should I buy your debt? What we're trying to do is we've got a bit of a situation. Donald Trump, he's coming with the pressure of the tariffs. He's also going to be talking to us about Forex intervention, because every time the dollar against the yen goes up, we can really go in and pick up as many dollars as we want just to bring the value of dollar against the yen down. So we kind of got a little bit of a manipulation story going off. But Trump, he hasn't spoken to us about it yet, but I think it's going to be one of the reasons why we have a bit of a problem when it comes to tariffs. But anyway, you interested in my bond? Well, listen, bro, increase your interest rates, and that might get my attention. I'm not going to take that risk now based on the way things are. Which is why in the article, it goes on to say that there are a few people that say the following. It says, almost no one in the market expects the central bank to raise rates from their current level of 0.5% at the meeting, which is next week. No, tell a lie. Where is it? Is it next week? Yes, it is. FOMC statement. And then we have got Bank of Japan. I'll tell you why it's not there, ladies and gentlemen, because I haven't included my yen. Bear with me a second. There she goes. So we have got the FOMC projections this week, followed by the Bank of Japan policy statement tonight. Sorry, I've got that wrong. It's tonight. Bank of Japan are going to let us know what they're doing tonight. And then afterwards, you've got the FOMC on the Wednesday. Okay? Forgive me for that. So there is the expectation that they're going to keep the level as they are. But there's also anticipation that they are more than likely going to try and hike the interest rates, because the problem with their yields is they keep going up and no one's picking up their debt. Now, the problem with that is if you do increase the yields on the interest rates for the Japanese yen, you kind of force investors to get rid of any carry trades. That could mean your dollar could be getting ready to get smacked to significant levels. So why is the stock market going up? Doesn't make sense. Well, we know something about the way price moves. When you buy something of value, what do you plan to do with it in the future? You sell it. So the smart money, dumb money chart is giving us a picture. We've yet to hit an extreme, okay? Now, the stock market is only moving up because what? Because there's a war? Or what? Because Trump's saying something? Or it's... what news has come out? Trump Media has filed registration for statement for Bitcoin and Ethereum ETF. That's good news. I mean, if we just quickly go over to Bitcoin just for a split second, we can see Bitcoin is obviously moving down, but that's expected because Trump said lots of great things about Bitcoin, but he said nothing about Bitcoin. But regardless of it all, guys, looking at this chart here, the smart money, dumb money, we haven't yet hit an extreme right now on the smart money, dumb money principle. Now, for anybody new, what this chart shows you is when the blue line goes down, it means smart money investors are selling as prices are going up. Should we back that up? Okay, then. So going over into our chart to have a look at where we are. You guys are familiar with this. And I'm just going to bring up my chart right here because I've got a screenshot of it. Save me doing it earlier on like I did. No, not this one. I'll just bring it up for you. There we go. So this was last week's reading. There it is. So as prices are going up, yeah, volume on the sell side is above average. Look at the two pink bars, okay? So we know and can justify that as prices are going up, investors are selling. We can back that up again by looking at the number of distribution days on the NASDAQ and the S&P. If there's more distribution days on the NASDAQ and the S&P, it means investors are selling. So look at this. It says here that 80 to 100% of your exposure of capital should be in the market. All right. But you've got a buildup of distribution days happening on the stock market. You got JP Morgan talking wet all the time that things aren't looking so great. Of course, we don't know where we are with the interest rates. But when you look at it, ladies and gentlemen, with the number of distribution days building up on the NASDAQ and the S&P, and then you go over to price action, you can say to yourself, clear as day, that we're going to have one more bout of movement to the upside because the war is happening and they think everything's calming down. In other words, they've reacted to the story of the war. Investors are now going to be selling their liquidity from the stock market and they're going to be going over into wonderful assets such as oil, natural gas, and of course, our dearly beloved gold. You want the proof of that, ladies and gentlemen? Just go back to subprime mortgage crisis 2011, 2007, 2008. We go into the daily time frame and you can see bright as day. Whoa. My friend traded that, by the way. He made a sick amount of money on that. But so subprime mortgage crisis, where are we? Here we go. 2007, 2008, the big rally upwards. There she is. Did you see that spike, yeah? When oil's price went negative. Anyways, so subprime mortgage crisis right there. The rally was happening. They were getting concerned. They declared that there's a problem. Bang. they've already made their money on the drop to the downside, which is where in the gold hedges index, that is going to then end up coming up to a point up here where they're heavily long on the principal. So they're making money as price is going up. Then they're going to want to sell it. And then that's going to end up reversing gold. So what I'm saying to you, ladies and gentlemen, is this. Investors are plowing into commodities. Do you want the proof of that again? Let's just quickly go over to the ETFs. Look at this. So lately, ETFs have been starting to see a bit of a demand. This is in the millions from the last week where money is going in terms of ETFs. ProShares Ultra Bloomberg Natural Gas, Bloomberg Crude Oil, Invesco DB Oil Fund, Copper Index Fund, Natural Gas Fund, Crude Oil, Brent Oil, Energy Fund. Look at these gains from last week. In the month, gas is up 79, crude oil 21%, oil fund 33%. Like this is wild. Investors are rushing for safety right now. And whenever investors rush to the safety of commodities, that's where they've accepted that maybe, yeah, we have just hit the fan. That's the problem. Now, for Bitcoin, well, hold on. We're not going to dismiss Bitcoin just like that. Speaking of which, on the state of crypto, having a look at things, says here that the Fed is expected to shake Bitcoin this week. Now, one guy come out with a comment and he's saying, okay, you know about this with the Federal Funds Reserve market influence. Yep, their expectation is 99.8%. Well, we talk about this all the time. We know that they're going to keep interest rates as that point. Just quickly go over and have a look. Has the expectation of it to change going in? Here we go. 81.3%. They're expecting that the rates are going to be at 4.25, 4.5%. Some dude thinks it's going to go up. Imagine if it goes up. You do not understand what it means if the Fed were to increase the interest rates. But let's just put this aside. Hold on a sec. Tariffs, right? Tariffs haven't actually been put into play. It's just been, we're going to give you a tariff and you've got a few days to work it out. Hold on. We'll put a pause on the tariffs. We're going to give you 90 days. Let's make a deal. Okay, cool. So what's your tariff? Okay, we'll give you 55%, 100%, whatever it is. Okay, so that's you. Euro, where you at? Well, we're not doing anything right now. Just leave my guy to sort out his problems in-house. We're not going to, yeah, we're cutting our interest rates. We're going to spend more on our funding for the defense. Yeah, we're all right, man. We don't need to worry. Plus, everyone's coming over to our currency, and your currency is getting slapped and violated because they just don't want your debt because it's shocking. And we offer a reasonable rate of return when you come over to our bonds because we've been doing things properly, man. That's the euro right now. So no talks of the euro. They're too slow. They're not doing anything, okay? So that's the tariff story. Now you've got this impact of the war. What's going on with the war? Well, oil's prices going up. Now remember, CPI doesn't include food and energy prices. Why? Because they're too volatile. But the reaction that people get or do because of oil's prices going up is naturally going to change the way consumers behave. They're going to retain money. They're not going to spend money. Companies are then going to have to increase the cost of their goods because of oil's price going up. Transportation companies might be getting cheesed off because they're not happy with the rate of pay that they're getting. Even though average hourly earnings have gone up, well, if oil's price keeps on going up, there might have to be some layoffs. So now we've got another problem when it comes to whether or not the Fed should cut the interest rates. Well, if inflation ain't going down, then there's only one thing you can do is either keep the rates as they are, just increase it up a little bit. Doesn't matter if Trump says that the interest rates are too high. He's just saying that because everybody else is going elsewhere for money. Look, euro 2.15, yen 0.5, even the Canadian dollar's down at 2.75, and the New Zealand dollar's 3.25 at minimum. But the dollar's up there with 4.5% on the interest rates. You ain't borrowing dollars, especially when your dollar is depreciating. I can appreciate you borrowing pound. If you go over to the pound right now, look at that. Let's go over to the pound. Where are we at with the pound? Come on. There you go. Sterling. Yeah, I'd borrow that. Look at it. Going up. It's a nice trend to the upside. I would naturally go and borrow the pound at 4.25% because I've got a powerful pound. I've got a strong pound. I can then take that pound, convert the dollars into it, okay, and then go and get myself some stock. But I've got a strong pound, so that gives me more value to convert into dollars to then put those dollars to work into the stock market, all right? So I'm covering the fact that the dollar is cheap. Okay, and the dollar's got no appreciation, but because I've got pounds and I've needed less pounds to get more dollars, I'm at a win, bro. That's what Trump doesn't like because the US isn't giving the investor that opportunity to do that. Okay, going into Bitcoin price action to break it all down for you, ladies and gentlemen, as well. The idea, especially from this article, saying about the Fed's going to be giving Bitcoin a little bit of a problem. One gentleman has come out saying that Bitcoin trading range in favor of more price swings. He goes on to talk about when the image comes up. No, I'm not. Whatever. Basically, the image shows this. Okay. It says that Bitcoin is stuck in a range. And that basically means Bitcoin can either go up or either can go down, but the direction that it takes will be the real one. The real one. Now, I know 90% of you are like, okay, if it breaks to the upside, that's going to be the real one. And some of you might be like, if it breaks to the downside, that could be the real one. Well, let's just back that up just for a second. 669,523 on the ETFs. BlackRock's been busy last week, okay? So it has picked up a few Bitcoin. This balance may actually get increased again, depending on what activity is coming into play. Solana talks. Where is it? I did see an article. Here we go. CoinShares moves to launch Solana ETF. That would explain why Solana is seeing a little bit of success, especially over the weekend when it was up nearly 6-7%. So it's making a nice little move from there. Ethereum, in principle, just not really going anywhere. So it's back in the XRP formation. For those of you that know, you know. It's in the XRP formation, which means it doesn't go anywhere for long periods of time. And if it does go up, it's probably because there's a glitch in the system where there's been an influx of selling or buying, something stupid or something of the anomaly. But basically, Ethereum isn't going anywhere, okay? Quickly rolling it over to XRP. It's just that stupid coin. But fundamentally, Bitcoin is doing very well to hold at this 50 EMA. So let's just break it down for a second before we go into the order flow of Bitcoin before the market opens in 2 minutes' time. If the idea that all of what I'm saying to you right now is gearing us to the belief that investors are going over to commodities, that technically means that the stock market should be coming down in the near future. But in order for it to come down, investors need to get rid of the exposure by selling. And the only way that they can do that is if they make the market believe that everything's okay, prices are rising, and retail traders come in, institutional investors also coming in as well. Go look at GameStop, didn't stop them from buying when it was rising, all right? So big money managers and smart money is going to be selling into that interest. The stock market hits a high. So doesn't the stock market follow Bitcoin, or doesn't Bitcoin follow the stock market? This is what I mean about Bitcoin needs an event in order for it to come through as the hedge. What is Bitcoin, ladies and gentlemen? What is Bitcoin? And don't say it's crypto. If you understand where I'm going with this, what is Bitcoin? Please comment and try and get this comment in there right now and tell me, what do you think Bitcoin is? It's one word. What is Bitcoin? You bang on about it all the time. And I keep saying it's a money heist. What is Bitcoin? Not hedged. No, forget that. What is Bitcoin? Commodity. Thank you very much. Bitcoin is a commodity. So if investors are going to start turning to the idea of Bitcoin being a commodity, then by the principle of that article, when Bitcoin does break, that would be the real move, because the shit would have hit the fan across the board. Bitcoin would not be moving up with the stock market. It's getting ready to make a move. Stock market comes down. Bitcoin shoots up. The world is all scared. Commodities fly up. Bitcoin has every reason to continue to the upside, in my opinion. Does that make sense, ladies and gentlemen? Hedge against inflation, yeah. It is the most liquid commodity. It is. Probably on Circle. Can I not just ask, isn't a commodity something that you can physically hold? Yes and no, right? What's the first thing that you say to someone when you say, here's a sterling coin? Yeah, that's a coin, right? Cool. I've got £1 here, and I've got £1 in my bank account. It's still the same thing, except one's digital, the other's physical. Okay? I can trade physical gold by going to the jewelers or a gold dealer and be like, here's a bullion, right? Let me give you some of that, okay? And you give me cash back. And you're like, okay. Or I can say, I'm currently on spot positions on gold, X, Y, and Z. I'm going to get rid of that because there's money in it. It's digital. You're right about a commodity being held, but back in the day when they used to barter, you know how they used to do it, cows and milk, sheep and all that, yeah? We're evolving. And Bitcoin has set itself a position where, as a commodity, even though you can't hold it unless you've got a wallet, a ledger wallet, technically you got it. If you're not holding the keys, then you haven't got your Bitcoin. So see the keys as the commodity part. When someone says, what's Bitcoin? When you say it's digital money, they say, well, can I hold it? When you get round the idea of explaining that to them, they'll be like, oh. So, yeah. So you're correct, but I think it's like we're moving on now with that idea. Capish? Cool. Hey, Tina, what do you think about SMC, smart money concepts? Imbalance, balance. Fast move up, fast move down. It's just smart words. That's all it is. When you understand how the game works, that you really understand how the game works in terms of smart money concepts, is the idea of the bid and the order flow. That's it. Bid and offers. Who's prepared to buy? Who's prepared to sell? At what point? How much? And how long for? And how fast? That's what you got to look at. That's what it is. But remember, the concepts have been derived from noticing a couple of things and thinking, well, the only things that could be done, that could be based on, is a certain type of behavior. Let's just put a nice, pretty word to it. Ultimately, when there has been a massive exhaustion of price hitting the lows, going down and down and down, it has become exhaustive in bids because you can't sell if no one buys. So when the selling's too much and the bids are there, they're retaining and absorbing all of that, all those orders. It's going to come a point when the bids are going to be like, we're not going to be buying from this point. Let's start offering higher. And the same people that were selling are like, hold on, why is it going back up? Okay, let's start buying again. Oh, there you go. It really is that simple. Tino, will XRP? Yeah, thank you. Tino is secretly a Bitcoin don't be silly. Anyways, ladies and gentlemen, I hope you've enjoyed that live stream. Catching up with you all today. I'll be tuning into you all later on, but hit the like button, subscribe, because tonight got to get you all prepared for the Bank of Japan. And of course, this week is FOMC. So make sure you're subscribing, man, because it's going to be the biggest live we do. All right? Take care of yourselves, gang. Mad love and respect. Peace.